Hi everyone, let's cover my Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we are looking for a zigzag to the downside in a wave ABC, with wave B internally being a running triangle, ABCDE, which came to mind during the weekend and was shared in the Elite membership group. It mainly came to mind because the move to the upside from wave B was very slow, took a long time, and higher probabilities corrective. So even in a bullish case, I was looking for another drop to the downside into the 114, 113K area, which is where price is at the moment. Which means that for the bulls, this is an area of interest, and looking for signs of strength is interesting, but that of course depends on your personal trading plan. From an Elliott Wave point of view, we want price to take out this high at 118.6K, because that would confirm this move to the downside as a three-wave structure, significantly increasing the probabilities for price to take out the all-time high. Which means that if you are a very patient, very safe trader and you don't like to maybe like snipe the lows and stuff, what you would wait for is price to take out this high and then retracements in the future into support, which then gives you an opportunity to join and look for price to move towards the upside. Now let's talk about a little bit of detail. The common target area for wave B, if it's a triangle in a zigzag, is the 0.1 to the 0.4 Fibonacci, taken from the start to the end of A, which is nicely respected. And the target area for your wave is C here is between 115.4K and 113.5K, which is calculated using two different methods. One is the triangle thrust, which is a vertical line taken from the end of A straight down into the extension of the BD trend line, drag it to the right onto the end of wave E, and this gives you the top of the box. And then the 0.618 is a trend-based fib extension taken from the start to the end of wave A to the end of wave B. The invalidation for this scenario is 111.9K. The second scenario is the bearish scenario, where we want continuation to the downside. At the moment has lower probabilities for two main reasons. One is if this is a wave 1 and a 2 and you look for a 3 down, wave 2 did not even retrace to the 0.382 Fibonacci, which is taken from the start to the end of 1, which is incredibly uncommon, right? It's rare for price to not at least reach a 382 when looking for a wave 2. Of course, it happens, right? It's all probabilities, but that is it, right? It's probabilities, and not touching the 382 lowers the probabilities that whatever this is here is a 1-2. Now the invalidation is 118.6K. We know that level because it basically confirms a three-wave structure for the bulls, so that's an important level. But something else that is not great in the impulse to the downside, at least not yet, is that we make another low on a lower amount of volume. Now what we like to see in an impulse is a wave 1, 2, maybe another 1, 2, but eventually a large wave 3 to the downside. And wave 3 most commonly has the highest amount of volume. So what we like to see is weakness to continue, price keeps falling, right? Does not take out this high at 118.6K, and it keeps falling on an increased amount of volume, right? You want the volume to increase, and at the moment we have a new low on a lower amount of volume. And then we get to the levels. So these are all the levels that I have on my chart. Price currently finding support on a two range point of controls of this area here. But you can see there are some more levels. Feel free to copy them if you like. Now we also have some news this week. And we have news tomorrow, Wednesday, Thursday, and Friday. All these times are Central European time zone. So make sure you trade safe, right? Can increase the volatility on the chart during those news hours. And then we get to the probabilities. So the conclusion is, as volume is decreasing while price is moving down, I remain most interested to look for a bounce towards the upside. In a bearish scenario, wave 2 did not retrace to at least the 0.382, which in Elliott Wave terms basically means it's uncommon, so it lowers the probabilities. So therefore, the bearish scenario remains an alternative till proven otherwise. Now for the bulls, to give more confidence in looking for longs, right, or the all-time high, step 1 would be for price to touch the 0.618 at 116.9K, right? But most importantly, it's taking out the high at 118.6K. That is the one that you want to see taken. If price can take out that high probabilities to take out the all-time high at a later stage. And then step 4 is then look for long opportunities, right? Now the bears, quite easy. you don't want to change the structure, you don't want to take the high, you just want weakness to continue, price falling, preferably increased amount of volume. Now, if price would take out this low at 111.9k, I do have some ideas, but they are at the moment not relevant because we haven't taken out the low. So as long as price doesn't, I will not yet share all of that stuff, right? So let's just wait and see what happens. But the probabilities are clear, right? We know what we are looking for. We know the probabilities. We know how probabilities change as well. Like, for example, that level at 118.6k is very important. Currently testing support. Maybe look for some signs of strength, etc. Right? So hopefully you found this video helpful or valuable. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.